Hello guys, I welcome you in this wonderful video. Today I'll be sharing with you some few price action techniques that will improve your trading. As you can see here, we have an uptrend, and let's say from this uptrend you'll be looking for buying opportunities. The first thing that traders will do is that they will observe this corrective wave here, and then they will try to identify the pattern or the flow of this corrective wave. So let me just put my trend lines here, and you can see that we have a pattern which makes up this corrective wave. And then the next thing that we will do as traders is that we'll wait for that pattern to be broken, so that after the breakout we execute our trades. That's how we do it. Wait for a channel to be formed, and then from the breakout of that channel we execute our trades. Let's say now the market continues to move, and then the market breaks out the channel, as you can see here. That's when we'll begin to execute our trades, because it is now a sign that the market has begun an impulsive move. Why? Because this wave here has breached outside of the flow of the corrective wave, which tells us that it's over with the sellers which were making up this corrective wave. Then we buy here, and let me play the price again. And now we see something strange. You can see that the price began to move on our favor, and we were very excited. And then something interesting began to happen. The market starts moving down, and a lot of traders, because you've entered here, as the market starts moving down and passes your entry point, a lot of traders will begin to panic. And put it in mind that usually there are two areas where maybe a stop loss can be positioned. A stop loss can be below that low there, or some will put the stop loss inside this pattern here, because we are not expecting price to come inside this pattern. So it's still reasonable if you put it inside this pattern here. But then if you put it inside this pattern, maybe somewhere in the center or in the middle here, you need to know that this move here might have taken you out. And even if it takes you out, a lot of traders will then begin to think that the decision that they've made here, by looking at it as a buying opportunity, they will begin to think that now the decision that they made was wrong. And then as soon as the market takes them out, they will then step aside. Let me just continue to play so that we can learn from this beautiful move. You can see the market is making up waves, and it's again going down. As you can see that it is now giving you a new structure that is being formed, or a new pattern that is being formed here. Now we are beginning to see that we have this area here, which has been confirmed not only 2 times, but 3 times, considering that initial high then. So we can see that with this area, which has been confirmed multiple times, the price came in and bounced in this area 3 times. So now this tells us a lot about this area. It tells us that, okay, this is a very important area. And some of the traders will begin to look at this and say, okay, now I need to begin to trade this as a range. It's not advisable to begin to trade something as a range while it's still in the middle of a trend. Why? Because you haven't known if this is already in transition to a downtrend or what. For you to see that, you need to at least receive some lower highs, but now we haven't received something like that. And to just drop a simple lesson, you need to know that corrective waves, if I can just draw here, corrective waves happen in different structures. You can have let's say an uptrend with a corrective wave going down, uptrend, a corrective, uptrend, a corrective. But there will also be another uptrend with a corrective that is a little bit sideways, an uptrend, a corrective, an uptrend, a corrective. It is still a corrective here. It doesn't necessarily mean that this, for the fact that it is a straight corrective. And if you can zoom in here, let me just illustrate. It will be something like a range. But it doesn't necessarily mean that this range signifies a reversal. Just as we can see here, we can see that, okay, initially the corrective entered in a structure that is going a little bit down, just like here, but we're proven wrong that no, it's something like this. So if we see something like this, that means that we don't have to necessarily think that this is a transition leading to a downtrend. It simply means that with this pattern, we didn't actually analyze the corrective completely, because it wasn't complete here, and we were proven by these moves here. And let me continue to play the price. And now it moves up, it approaches our resistance, and then boom, it breaks it out, meaning now the impulsive wave has begun. So you can see that we have 2 structures that we observed in this corrective. Now we have the first one with yellow lines of this first channel, and then we try to enter here. Unfortunately, we're a little bit earlier. and the price began to move in this sort of a range like structure, and then all of a sudden that's where it gave us a major move. So by observing this, what do we learn from this? It means that firstly, if you entered here and you were kicked out, let's say your stop loss was around here, if you were kicked out, it doesn't mean that you were wrong as a trader. It means that your perspective was a little bit earlier than that of the price. So if it happens that you are kicked out in an initial entry, it doesn't mean that step aside, but it means that come back and reanalyze. And as we can see that when we reanalyze, we now figure out that, okay, this wasn't necessarily like a diagonal corrective. It is something like a range like corrective. So if it's a range like corrective, then we have a new beautiful structure like this, and then this structure is gonna now guard our entry, meaning we're gonna wait for its breakout, and then boom, we are happy again with our entry. But obviously, if it happens that your stop loss was somewhere around here, then there's no need for you to panic. You'll just wait and wait and wait, and then price continues to work on your favor without any losses accumulated. So this is what you have to keep in mind whenever you analyze initially and your analysis doesn't work. It might mean that you misunderstood the structure of the corrective. You have to reanalyze again and try to figure out the move or the correct move of the corrective, and then from that entry your trade is gonna work and you're gonna reap your profits. So I hope it is making sense. This is what I wanted to share with you guys. Make sure that when you analyze, you don't just get out when the market kicks you out. Maybe it can happen that you just rush to enter without understanding the structure. Structures in the market always change. It is not fixed. And for you to benefit, let's say here you were kicked out, maybe you lost some few dollars. The dollars that you lost here will never be compared to the profits that you'll make in this big move. So it is very, very essential for you to be kicked out and then bounce back with a new analysis, trying to understand the structure and then making your next move. And if that next move doesn't work again, try to redraw again the structures and understand how the market is flowing, and then re-enter again. In that way, it'll be very, very easy for you to be accurate in your analysis, and you'll understand price action because you don't just ignore structures, but you pay attention into every structure that the market brings to you. So thank you guys for watching.